Hey everyone, welcome back to the Two Idiots podcast. I know it's been a while. Ruben and I were busy for the this week, so we couldn't record a video. So, Ruben, how are you doing today? Today is Saturday.
I'm fine. How are you?
Yeah, doing okay.
Yeah,
Okay. So what are we going to record today?
yeah. So, what you brought up, so we will be doing a video on a stock split in general, and then we'll dive down into Tesla, and then when could potentially be the next stock split be? Yeah,
That's a great topic. So, yeah, there's a lot of misconception on social media and misinformation regarding why companies split stock. So, Ruben, like what is one reason that companies split stock?
the fundamental reason is they want to make it more affordable to all kind of investors. That's one reason.
Hmm.
And then the next reason would be to increase the trading activity within the market. So if your stock is too expensive, it's too expensive to do options trading on it.
Yeah,
But with the stock split, it makes it actually relatively cheaper. So and also, let's say you are giving out your stock as a stock option to employees. You will be giving out one stock or two stocks if it is 4K or 5K. If the stock is worth 4K or 5K.
that's right.
But if you split the stock, then you can give them higher quantity, but it's exactly the same. But you have control over the fraction. So if it is 4K, you can only give one stock that's 4K worth. You
Yes,
cannot give 4.5K or 4.7K. So those kind of uh, remunerations are not possible. But
mm,
when you split the stock, and if the per value price of the stock is lower, then it's actually feasible. Yeah.
absolutely. That's the most important reason. And there's also something called, a bid ask spread in stocks. Like take Google's stock, for example. Right now, I think it's hovering around the $3,000 mark per share. So, if a retail investor like you or I want to go and buy it, um, like there'll be a very large spread between the bid price that the broker charges us and the ask price also that the broker charges us. So, one argument that is for splitting a stock is that this bid, so, since the stock price becomes a lot smaller, like I think Google has announced a 24-1 split, right? So assuming the stock price is 3,000, so that'll bring the new share value down to $150. So the bid ask spread becomes a lot smaller, and as you pointed out, it becomes a lot more accessible to shareholders. And also, there are some CEOs for whom the corporate incentives are based on getting the share to a certain price. Like for example, I think that applies to Elon Musk as well. Like I guess
Yeah,
in
it's one of those metrics. Yeah, so the market cap has to hit certain value. Yeah.
exactly, yeah. So splitting a stock definitely helps with this because the trading volumes go up,
Yeah.
and when trading volumes go up, a lot of people buy and sell, and
Yeah.
prices tend to move upwards.
Yes. Yes.
Yeah. So those are the key reasons, guys. Yeah, just make a note that a split does nothing to the fundamentals of the business itself. The cash flows do not increase, the dividend payments do not increase, the earnings do not increase just because the stock split itself. Yeah. Now, one of our viewers, Ruben, he asked me if we could talk about the Tesla stock split. So
Yeah, sure. We can talk about Tesla stock split. Yeah.
yeah, so why don't we start by looking at where the price is? Let me share my
Yeah,
screen.
sure. You can power up Yahoo Finance.
Okay, wow, it's gone up 4% yesterday. Interesting. So, if you look at the last time Tesla split their stock, where was it trading? Around 2,500s, right? Close to that.
Yeah.
Yeah, I think they did a 5-for-1 split. Now,
Yes.
I don't see a reason to split it at this price because it's less than $1,000, and they just did a split last year, right?
Yeah.
So yeah, and I guess the management might revisit it once it crosses like $2,000 again. We just don't know.
Yeah.
But I'd also like to look at what would happen if, okay, assume the share price hits $1,000 in 1 month's time. Let's look at what will happen to the, and they do a let's say a 10-for-1 split. All right, so that means each share will be split 10 times. So
Yeah.
yeah, so the face value of a share will become $100, $1,000 face value. So let's just look at what will happen to the financials if such a 10-for-1 split happens. Actually, wait, I have a better website for this called ROIC.ai. So it shows you per share metrics, which I find very useful at times. Okay, yeah. So you can see my screen, right, Ruben?
Yes. Yes.
Yeah. So what's going to happen is, in case there's a 10:1 split, each of these metrics gets split down gets
Yes.
divided by
Just
10,
by
right?
Yeah.
So the 2021 revenue per share was roughly $54. Now it's going to drop to yeah,
$5.4.
$5.4. $5.5. And the same thing will happen to the earnings. Instead of having $5.5 per share of earnings, gap earnings, you're going to have like 55 cents per share. Same thing will happen to free cash flow. You're going to have like 35 cents per share of earnings. And similarly, all the metrics get split by 10.
Yes.
So the point here is nothing really happens to the underlying business itself. Cash flows don't double, earnings don't double. The company doesn't suddenly have a capacity to pay dividends. So don't believe all those things that you read on social media. The underlying business itself doesn't change much.
But what happens is, once it's become more accessible to the common general public, then eventually, it tends to go up a bit, by something 5
Yeah,
to 10%.
absolutely. The share
Just
price does go up, and there's a lot of research that proves a split is great for the share price and liquidity. Trading volumes go up, option volumes go up a lot.
yeah.
And yeah, ultimately, it helps out the little guy, the small shareholders.
Yeah.
That's all it does. Now, one interesting parallel you can draw is, all these off late, Amazon announced a split. I think it was 20-for-1. I might be wrong, but something in that magnitude. Google also announced a 20-for-1. Tesla announced a 5-for-1 last year. Apple announced a 4-for-1 last year as well, 2021.
Then Nvidia also split their stocks.
Oh, is it?
Yeah.
Oh, okay. Okay. Do you remember how the
I don't know the ratio, so it's either 4 or 5. I'm not sure.
What is Nvidia's share price?
And now it's around 260.
265. Yeah. Okay. Makes sense.
The one company that I envy the most is Nvidia. They enjoy the highest possible metrics for across all. The price earnings ratio, they have the highest. Price to sales, they have the highest. So it's just crazy.
Yeah, I mean, it's a company with a wonderful business and a very strong moat, right? So
Yeah,
I would
yeah,
say those valuations are truly justified.
yeah.
There's
Yeah.
no tech company that even comes close to the assets and intellectual property that Nvidia
It's sort
possesses.
of the legendary business.
Yeah, those multiples are well deserved, I would argue.
Yeah.
So, I just wanted to draw a parallel between all these companies that are, announcing splits versus Berkshire Hathaway. So, if you look at the Berkshire Hathaway A shares, it is sitting at $513,000 a share roughly. So, when Buffett started buying Berkshire shares in the 70s, I don't remember it. I think it was like $9 or $11 a share.
Wow.
So that $11 has now grown into more than $500,000 per share. But despite this,
Well, his market cap is 756 billion. Wow.
it hit a new high yesterday.
Wow. 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 I
Yeah,
thought
it's a new
it's
52-week high.
close to 1 billion. Yeah.
Yeah, they'll get there. They're like a tortoise. They slowly keep inching ahead. You see that price action. You don't see
Yeah.
big spikes and falls except in 2020
Yeah.
and maybe in 2008 as well. There. Yeah, I mean, what I wanted to say is, like, despite such a high price, and maybe in 10 more years, this will become $1 million a share. And I don't think they'll
Yeah.
ever do a share split because Buffett and Munger have very clearly announced in the past that they don't want to attract, like traders to their stock. They want a certain kind of shareholder
Yeah.
who's very long-term oriented and who
Yeah.
buys and holds for a long period of time rather than just keep buying and selling.
But what happens is those certain class of shareholders volume keeps shrinking and shrinking in the future
Yeah,
if if your share price keeps going up.
yeah, that's a
In sense, let's say that someone of that class at 25 years old bought this stock 20 or 30 years back, and then for him, so the share price went up along with his age. So now just imagine the similar class of guy at 25 years old, but he doesn't have $500,000 to start off. So he's actually missing out on those kind of investors who has the mentality to buy an old, but they don't have the cash position to do it. Yeah, they have B shares.
That's a yeah. That's a wonderful point you bring up. When a share's price goes up, the liquidity reduces, right? Because people can't buy in and out of positions. So
Yeah.
they solved it by two ways. Like one is what you pointed out. They recognize the need for a separate class for people with smaller net worths who can't afford, a $500,000 share. So that's why they came out with the B share. I think it was like in 2011 or something when they came out with this. Yeah, so this is a lot more affordable. In fact, this is the one that I own. I own about eight of the B shares. The other one is like, let's say you hold the A shares, Ruben, and you want to sell for whatever reason. So there's actually a number that Berkshire Hathaway gives, which connects to the head of investor relations or someone. So you can actually talk to this person and sell your shares directly to the company, back to the company.
Oh,
Yeah.
okay.
Especially for people who are selling large blocks. Like
Okay.
there are some early investors who hold like 10,000 shares, for example. And if they decide to execute a market order, that will like push the price down heavily, right? So that's a big
Yeah.
block being transacted. So to prevent this, to prevent sudden swings in the volume and the price, Buffett has set up a mechanism where you can just call in directly to Berkshire Hathaway, and you can sell the shares directly to them without costing any.
The market price.
Yeah.
Okay, that's great.
Yeah.
Because these kind of things, if you don't have the other guy to catch on the other side, it will just go down. Yeah.
Absolutely. Yeah.
For no reason at all, it will just go down.
Yes. Yeah. You're right. So there's just one last point I wanted to mention before we end this video. We pretty much covered everything about stock splits. So like a lot of people are making the argument now that stock splits are unnecessary these days because many brokers allow you to purchase fractional shares.
Fractional shares.
For example, Robinhood, the popular US zero commission broker, which most youngsters use. You can buy fractional shares. You can buy like 1/10 of Berkshire Hathaway for $34 a share. However, we haven't reached a point where all brokers allow this. So there's still a case to be made for stock splits. And again, like even though you can buy fractional shares, you can't buy fractional options. We don't have a fractional option possibility yet. So,
Yeah.
so like there's still a case to be made for stock splits for the options as well as the common shares. Well, guys, I hope you had fun and the video was informative. Please leave your questions in the comments below. We'll be happy to take them. And yeah, as Ruben always points out, if you want us to cover more topics, just let us know. We'd be happy to make a video. That's it for today's session. Thank you very much. Have a wonderful Sunday ahead and trade responsibly. Bye.